Well, top of the morning to you folks. We are here today to talk about the economic calendar for the week to see is there anything coming up that we should be really worried about in regards to inflation, because inflation is the number one enemy of the Federal Reserve right now. So they keep increasing rates higher and higher and higher to combat inflation. I'm going to give you the expectations of what they're going to do at the next meeting. Well, I'll let you know that right now. It's a done deal. They're going to raise rates at the next meeting. But at the end of this video, I'm going to give you an idea. Well, I did a video on Friday, and it was breaking down an interview that the former head of the Federal Reserve of Dallas did with CNBC, and they gave us some insights into parts of the country that you might see kind of ramping up. And that housing market is going to be ramping up as well because there's over $2 trillion in stimulus packages going to some specific cities that you guys might want to be aware of. So let's get over to the economic calendar for this week to see what's coming up and what we should be concerned with. So today, as usually on a Monday, there's nothing coming out. But then what we have is a slew of information the Federal Reserve is going to monitor to see, is inflation starting to come back down, like we've been seeing, in all the reports from last week, or is this just a little hiccup and we're going to see it transitory, meaning it's going to rear its ugly head back up? So let's break down some of the news coming out this week. We have core retail sales coming in. That's going to give us how the consumer's doing right now and retail sales. Building permits, because we need more homes. We need more homes being built. Why? Well, there's two pockets when it comes to residential real estate. There's existing home sales. That's people like me. I own a house right now, and if I want to sell it, I could put it on the market, and that's an existing home. And then there's new construction. Well, basically, there's no existing homes for sale because people are locked in at 4% or lower, and they're going to stick with those. So we need new construction, building permits. We need those to keep rallying up and up and up to keep, prices where they are, because if not, if there's just a few homes for sale and demand picks up just a little bit more, you're going to have house prices continuing to rise because of the supply-demand factor. All right, and then on Thursday, all we have really that day is initial jobless claims and existing home sales. So, it's not as robust of a news events calendar as we had last week, was just purely consumer and production or producer inflation, which came in fantastic. So mortgage rates took a little bit of a drop last week. So let's get over the headline news that we have. Really nothing. Stocks climb to start the week as traders await earnings report. So there's really nothing from the Fed. There's no economic news that's really coming out. We're just going to watch earnings. And one of the areas or the pocket that people are watching right now is bank earnings. And a lot of those earnings are coming out much, much better than expected. So with basically no news out today, what's going on with rates? So what we watch this is what I see on my screen. If you're a mortgage advisor, I'd highly suggest you get this. You can link down to it below. It's MBS Live. What you're seeing right in the middle of your screen right here is what's going on with mortgage rates. Nothing, which is fantastic because it goes up and down and up and down, on 0.25% raises one day and then 0.5%. It's like the stock market. You see the stock market rally one day, 500, then down 200 the next day. What about just some stability? Maybe it goes up a little bit or down just a little bit. Well, today we have nothing, and that is a complete relief when it comes to the mortgage industry. So there's really nothing there. Then we go over to what the Federal Reserve is going to do at the next meeting. Well, if you see right over my shoulder, there's a 97.3% probability that they're going to do what? Well, they're going to hike rates one more time. So let's check out the probabilities. I'll get my head out of the screen. So what you're seeing right here is where the federal funds rate is and where it's expected to go. So right now where we're at is, if you look at this little chart over through here, we are at 5 to 5.25 on the federal funds rate. Okay, where it's expected to go is the Federal Reserve is supposed to raise rates to 5.25 to 5.5%. There's a 97% probability that's going to happen. If it doesn't happen now, there's almost a 90% that it's going to happen at the next meeting. So it's a done deal that they're going to raise rates 0.25%. From then on, this is where I differ a little bit from this. This is saying we're going to be steady at those rates until at least January of next year. So here's my expectations on this. I'm expecting or forecasting that the inflation rates are going to start plummeting. Okay, and you can agree with me or don't agree with me. Only time's going to tell because nobody truly knows. But once the housing or the shelter numbers actually get updated and into the equation, you're going to see inflation numbers in the twos probably within the next 30, 60 days. So I'm expecting still the Federal Reserve, they might pivot or might not, but I'm saying they're completely, their foot is completely off the gas pedal. They're not going to raise rates again anytime in the near future unless we have a catastrophic hiccup, which I don't see. Okay, so that's our economic news for today. The next thing we want to talk about is this. I did a video on Friday, and it broke down an interview with the former head of the Federal Reserve of Dallas, and he brought up some interesting points. One point that I kind of didn't even realize, or I realized it but never put the two components together, is there's $2 trillion in new spending going on right now. It's the Infrastructure Act with $1.2 trillion, the Inflation Reduction Act, $430 billion, and the CHIPS Act, $280 billion. Okay, so think of this. The government's sending out all this money, and in that video we explained these entities, these states, these cities have to use this money that they're given by the government, or they have to give it back. So they're going to use it. All right. So think about this. If your community just got $200 billion to improve its infrastructure, what does that mean? Well, that means there's going to be a lot of building, a lot of services needed, a lot of employment needed, a lot of commodities needed, a lot of everything needed in that community. So I was surprised last week on some analysts, the numbers that I went through. It was like, I'm in Chicago, and they said the Chicago housing market is doing very, very well right now. And I'm like, well, it kind of is, but it's kind of an anomaly because it normally isn't. Well, what's happening is the state of Illinois, especially Chicago, is getting a ton of money. So again, it reverts back. If we're getting all this money, as there's a city, a state, a community getting tons and tons and tons of money, it's going to pump a lot of money into that area, obviously. But what are they going to do with that money? They're going to build. They're going to use it. That's going to build up that infrastructure. Again, we're not going to have, in those areas, you're not going to see jobs going down. Because if you're building $2 trillion worth of stuff, you need people, you need manpower, you need supplies, you need the servicing sector. So this is nothing but good news. I think, as he said, this is going to keep us out of a recession as long as the Federal Reserve doesn't overdo it like they've done so many times in the past. So, sorry guys, the report today is kind of, willy-nilly because there's not much news out there, which is fantastic when it comes to you guys trying to buy your first house because we need rates and everything just to stabilize. So if you're you want to check out and say, Dan, what do you do? How can you help me? Well, I'm licensed in all 50 states as well as Puerto Rico. I'm a mortgage advisor, have been for over 30 years. So if you're looking to get pre-qualified, how much money does it take to get, buy that house you're looking for? What are the rates looking like? Can you buy down rates? How does that work? Or maybe, are you looking to refinance? You own your house, you have a ton of equity there, but you have a bunch of credit card bills at 20% interest rate you just can't pay off. Well, why don't maybe possibly look at a home equity loan, not trying to put you in any more debt, just trying to make you a good steward of the money that you're in control of. So if we can get you much lower rates, consolidate everything into one payment for you at a much lower rate, it's going to help you out financially. So if you're wanting to kick the tires on any ways that you can qualify for some kind of mortgage, either to refinance or buy a property, we'd love to hear from you. All you need to do is reach out to us right here. Give us a call at 844-775-5626. Or if you would, don't hit this short app over there. Hit the Apply Now button. What's going to happen is you're going to fill out some information on there, and then within 24 hours, I'm going to get back with you and go over your scenario to guide you with the exact path you need to take to make this as smooth as you possibly can. So thanks so much for watching, guys. God bless. Have a fantastic day, and I'll see you tomorrow. Bye-bye.